Good morning. We are the presenter of Group 2. So today we will discuss about the two financial statement which are the balance sheet and the income statement. So let's move on with the balance sheet. What is balance sheet? Balance sheet is a financial statement that shows the financial position or condition of an entity by listing the assets, liabilities, and the owner's equity or shareholders' equity. It is also known as the statement of financial position. So, what we can see in the balance sheet? If gusto niyo pong makita yung financial position or condition ng isang company, like let's say gusto po niyong makita kung ilan ba yung available cash nila, ilan ba yung pautang nila, or ilan ba yung pagkakautang nila, and to see the summary of their capital and the total capital of the owner. Makikita po ninyo lahat iyon sa balance sheet. In here, we have the sample of the format of the balance sheet. First, we have the company's name. Second, what kind of financial statement we are doing. In here, we are doing the balance sheet and the period ended. The assets, we need to list down all the assets and separate current assets to non-current assets. Why? Because current assets, these are the properties or ownership of the company wherein it is in cash or convertible in cash within a year. And non-current assets, these are the properties or ownership of the company na convertible in cash for more than a year. And we need to add the current assets and non-current assets to get the total assets. Same here with the liabilities. We need to separate the current liabilities with non-current liabilities. Why? Because the current liabilities, these are the pagkakautang ng company that is payable in a short period of time, most likely within a year. And non-current liabilities, these are the liabilities of a company that is payable in a long period of time, more than a year. And we need uh, to add the current liabilities and non-current liabilities to get the total liabilities. And lastly, uh, owner's equity or shareholders equity. For us to know the owner's equity, we need to do the statement of changes in equity. Uh, if gusto mong malaman what is the reason bakit nagbabago yung capital, bakit bumababa, at bakit tumataas ang capital ng owner, dito mo yun makikita sa statement of changes in equity. To get the owner's equity, hindi nyo po yung kukunin doon yung owner's capital, kundi ang kukunin nyo po ay yung ending balance and or ending capital sa statement of changes in equity. So, we need to add the owner's equity and the total liabilities to get the total liabilities and owner's equity. The goal here, kaya siya tinatawag na balance sheet, is the total asset should be equal to the sum of total liabilities and owner's equity.
Good day to all of you. I'm Kaylin Joy Torregosa from Group 2. And for today's video, we are going to report the balance sheet and the income statement. A further look at the balance sheet. The balance sheet reports the financial position of a company at a particular point in time. By financial position, we mean the resources available to managers to run the business. Examples are the assets and the financing that made the acquisition of those resources possible. Examples are the liabilities and shareholders' equity. So let's take a look at this example. This balance sheet of Taiwan Semiconductor Manufacturing Company, or TSMC, is a balance sheet of any entity wherein group of companies known to the investing world as TSMC. If you want to know about TSMC's financial position, you should look at the balance sheet that includes all the TSMC's group firms. These examples introduce us to an important concept in corporate financial reporting. Economic substance is more important than legal forms. So what is legal form? Legal form or legal status is defined as the national legislation Balance sheets sometimes referred to as snapshots. Why snapshots? Because they reflect financial position on a particular date. This example of TSMC's balance sheet are detailed on December 31, 2015 and 2016. As I said a while ago, financial position is measured at a specific point in time. Assets. Assets represents value of ownership that can be counted into cash. Assets are reported in a company balance sheet and are brought or created to increase a firm's value. There are five types of asset: tangible asset, intangible asset, financial assets, fixed assets, and current assets. Intangible assets are any assets that have physically presence. Examples are the cash, stocks, bonds, property, buildings, equipment, inventory, and etc. Intangible assets. Intangible assets have no physical presence, and the value of these is difficult to determine. Next is the financial assets. The financial assets has a value that's based on a contract. Example is cash, stocks, bonds, and etc. Fixed assets. Fixed assets are long-lived assets that cannot be easily counted to cash. Examples are properties, building, equipment, and furniture. Current assets. Current asset includes cash and assets that are expected to be converted into cash, consumed, or expended in the next
An
year.
asset is a short term if you expect to consume it or convert
Assets
it into cash
includes
within 1 year.
cash and cash equivalents, accounts receivable, inventory, plant property, and equipment. So let us move on to liabilities. Liabilities are the future sacrifices of economic benefits that the entity is obliged to make others entities as a result of part as a result of past transaction in other past events. A liability, generally speaking, is something owed to somebody else. Liability can also mean a legal or regulatory risk or obligation. Liability in accounting: companies book liabilities in opposition to assets. So there are two types of liabilities: the current and long-term liability. Current liabilities are debts payable within 1 year. Example of this is the account payable. While long-term liability, debts payable over a longer period. Examples are the obligation listed on the balance sheet, not due more than a year. So liability includes debt, accounts payable, underfunded pension plan, deferred tax liability. Let's move on to shareholders' equity. Shareholders' equity represent the net worth of a company. This comprises the final section of the balance sheet, and this financial metric is frequently used by analysts to determine the company's general financial health. So, what are the other things we should know about the balance sheet and income statement? Balance sheet and income statements are invaluable tools for business owners to measure their company's performance and prospect, but they differ in key ways. This is the example of balance sheet, while this is the example of the income statement. A balance sheet provides a snapshot of a firm's financial position at a specific point in time, while an income statement, also known as profit and loss statement, measures performance over a period of time. This accounting software help us to manage both of these financial statements, as the balance sheets gives us a snapshot of the company's financial position at a given point in time, along with an income statement and a cash flow statement. The balance sheet can help business owners evaluate their company's financial standing.
And now, let's discuss another type of financial statement, which is the income statement. What is income statement? It is a formal statement showing the performance of the enterprise for a given period of time. Kunwari, gusto mong makita yung performance ng company. Or you want to know if nalulugi ba yung company or kumikita ba siya or how much yung profit niya. This is the financial statement na kailangan mong tignan. Katulad ng sinabi ko kanina, before natin makuha si shareholders equity or the owner's equity, we need to know the statement of changes in equity. But in statement of changes in equity, we need the profit, which you can see in the income statement. So nakikita po natin yung connection po ng mga financial statement sa isa't isa. So, in here, we have the sample of the format of income statement. First, we need the company's name, of course, what type of financial statement we are doing. In here, we have the income statement and period of ended. And we need to list all the revenues and get the total revenue and subtract all the expenses. And to get the expenses, we need to the sum of all the expenses to get the total expenses and subtract the total expenses with revenue to get the profit. So, ganun lang po kasimple si income statement.
So, what are the other things we should know about the balance sheet and income statement? Balance sheet and income statements are invaluable tools for business owners to measure their company's performance and prospect, but they differ in key ways. This is the example of balance sheet, while this is the example of the income statement. A balance sheet provides a snapshot of a firm's financial position at a specific point in time, while an income statement, also known as profit and loss statement, measures performance over a period of time. This accounting software help us to manage both of these financial statements, as the balance sheets gives us a snapshot of the company's financial position at a given point in time, along with an income statement and a cash flow statement. The balance sheet can help business owners evaluate their company's financial standing. Expenditure versus expense. Expenditure costs that is spent on the purchase or growth of fixed assets, while expense affects the profit and loss statement of a company as they appear as costs incurred to earn revenue. The firm can account for it in two ways. These are capitalization and expending. Capitalization record the amount expending. The amount is changed in a current period to expense and reduces earnings. The grading principle is that if an expenditure is expected to benefit more than just the current period, it should be capitalized. Thus, appearing on the balance sheet, all other expenditures should be expense that is charged immediately to earning on the income statement.